Welcome to Math and Science. In today's video, I'd like to provide an updated analysis of the U.S. Housing market. So, about like 6 months ago, I did this video, try to kind of take a look at the U.S. home price index. Is in particular the Case-Shiller Home Price Index. And that's one of the leading measures of the U.S. Residential real estate prices. And this is basically the chart, we've been looking at last time. So the question is like, we saw a little bit of dip here, and we want to know what happens afterwards. That was back in March of 2023. So at that time, we actually analyzed this Case-Shiller index on the log scale and try to do some regression analysis and to see what the trend look like. As you can see on this chart, this curve really kind of like on this uptrend, generally speaking, but it does kind of goes up and down. In particular, these two pink lines are two standard deviation above and below the trend line. The trend line is basically shown here as this solid red line. So as you can see here, that here which is doing basically the subprime mortgage crisis, it went above. This is basically a housing bubble above the 2 standard deviation, and then you can see that it corrected. And obviously here there's a small sort of like a deviation above the trend line, and then the correction would be also smaller. That happened in the early 90s. And then just basically recently, especially following the pandemic, we had a very sharp sort of rally run up in the housing price. And then just kind of like last year, it seems like the housing price, that crazy, sort of rally kind of ended and then start kind of roll over a bit. And so that was basically what we saw in March. And then we made a prediction that like it has to kind of start to crack downward and then maybe overcorrect a little bit below the trend line. And that puts us the target around 240. And the process could take several years. So that was the analysis we did last time. And now fast forward like 6 months later, what is going on? You can see it did kind of the Case-Shiller Home Price Index, it did kind of go down a bit for but not let, but then it just kind of stopped and then suddenly went back up. So now it's kind of in this sort of like a consolidation phase, and that's what's going on at this point. Now this is only one of the sort of like one of the measures of the residential real estate price. There's another measure that is also commonly used, that is basically the median sales price of all the houses sold in the US. So shown here is this plot. And you can see this dates back to like the 1960s, and including some of the recessions is the shaded areas. You can see here, like obviously the median sales price also went down quite a bit, during the following the housing bubble. And then this is a very sharp run just in the past 2-3 years, following the pandemic. And then the median sales price seems like still going down and did not like behave like the Case-Shiller price index, which it already can rebound. So it's still kind of going down, but it's at non-stop kind of slow down, at a slower pace. And we want to point out that the median sales price sometimes can be distorted, especially when the affordability becomes an issue. Recently, as actually in the past year also, as the mortgage rate has kind of climbing up, really like now like at more than 7%. So which is kind of above the historical average, which is around 5%. So affordability really becomes an issue, and so people are really kind of forced to basically if they have to buy something, and they're just going to buy a house with a value that is less than they wanted initially. So that caused the median sales price kind of go down. So that can be distorted, So, but nevertheless, this provides a very good piece of data. Again, we can see the general uptrend. So the affordability is really kind of the issue as not only the housing price goes up, but also the interest rate is going up. So shown here is basically the Housing Affordability Index from the National Association of Realtors. So that was actually dates to like April of this year. And so, but it was kind of hovering around this level, around 80, 90, which is already below 100. So this is kind of the worst sort of affordability, in the past. It really kind of dates back to like the early 90s. So almost like 3 decades, more than 3 decades. So as the basically this index goes down, then becomes basically the housing becomes less affordable. So this is a huge sort of like unprecedented, deterioration of affordability. So the last time you had this kind of behavior really has to go back to the 1970s. You can see here, this is a chart. The data here, this data kind of overlaps, but then, before the 1980s, and you can look at the data from here. This is from the Federal Reserve Bank of San Francisco. So that was basically, again, you can see that it went down very sharply. So affordability becomes really worse and worse as the housing price increases during the 1970s, and then also as the interest rates just kind of skyrocket due to the high inflation, and the Federal Reserve just kind of hiked rates, a lot, really like a very steep, hiking. So in this case, this is really kind of like these are the two scenarios that you can see. Look at the data. There's no other sort of periods that is you can put these two sort of very quick deterioration of affordability. These are really comparable, and you can also see that this is like kind of a two-phase change. This is the first phase is due to really, the housing prices kind of increasing, and then just kind of in the second sort of leg of this drop, you can see this is just due to the quick increase, the rise in the interest rates, and the same thing happened, the first leg and then a second leg. So this is really kind of interesting. So what we, I guess, like given that similarity, it's very natural to kind of make a comparison between in the current sort of cycle and then the 1970 cycle, and that can be seen here. So in the 1970s, affordability becomes the issue because you can see the housing price increased a lot just in this decade, and then near the sort of the late 70s and early 80s, the interest rates skyrocketed. So that caused the affordability further to deteriorate. And now, if we look at what happened since 2012, that's when actually the price kind of bottomed. And that's when the run up happened for this current cycle. So that's put us basically another sort of decade up to like 2022. And then it seems like now we are kind of correcting. But if these two things are kind of really comparable, perhaps, what happens afterwards, after like, since the early 1980s, can be also really used as a reference to basically help us to, kind of have a guesstimate of what may happen next to the current cycle, for the housing market. So you can see here, even though the interest rate is very high, and even there are recessions in the early 1980s, the housing price continue to go up, but obviously it will not be at a crazy pace like it had during the 1970s, but just going to be at a regular slow pace. So that could be actually, basically some information we can use as we try to kind of guesstimate what may happen next for the current cycle in the housing market. So here we want to actually look at instead of the median sales price, let's take a look at the Case-Shiller Index, because that data is just recent. We don't have the data in the 1970s, but we do have this data, for the current cycle, because that data is available since the late 1980s. And that data is usually non-distorted because you are comparing the same house. So you can see that that index really kind of went up more than by a twofold increase from around like 140 to no more than 300. So that's a quick run up. Actually, if you look at the slope, the slope of this current cycle is actually not comparable even to the slope that the housing market had in the 1970s. That run up is almost like a threefold increase. This is only like a twofold increase. So this is even more kind of steep slope. So nevertheless, you can see that the similarity in the pattern, and therefore we think that the current cycle is more comparable to the 1970 cycle, and what happens in the 1980s can be used as reference to give us information about what happened next for the U.S. housing market. So the analogy that will happen in this sort of like period, which is basically in the 2000 and then the subsequent housing bubble, the collapse of the housing bubble really cannot be used as a reference for the current cycle. So we suspect the housing price will basically stabilize and then just climb up at a slow pace, not going to be at the same slope that we had, in the past, 10 years also. Now, one thing I want to point out, which is really kind of interesting coming out of this analysis, is actually to take a look at the recession and what happens, in correlation to the change of the affordability. You can see here we had a short recession, which is basically just in 1980, and then followed by another recession in 1981 and 1982, and it's at that time the affordability index kind of bottom, and then the affordability the situation kind of improves, as time goes on. So what happens here? We had a recession in the 2020, a very brief recession. So if this analogy can be really kind of be used as a reference, and when start kind of really wonder, maybe the affordability will bottom and will coincide with a recession, sometime down the road. So so that's the 1981-1982 recession. So if history is any guidance, it's possible that we may have a recession as the affordability index that kind of deteriorates a little bit further, and eventually it bottoms somewhere, in around the 80-ish, and that's when actually the recession occurs, and that's when actually from that point on, the affordability may start to kind of improve. So that's really kind of an interesting point. I just want to kind of share with you. So I hope you have enjoyed this video and found the information presented here kind of interesting. Again, your support means a lot for this channel. So when you get a chance, please do not forget to click the like button and also to subscribe to our channel so you can get more updates, analysis, about the markets, like the stock market, housing market, etc. And hopefully, it can help you a little bit in your investment, experience. Again, have a greater, weekend. I guess the weekend is almost over, but still, and happy trading, and thank you again for your support.